The market's had a strong bid, but volatility has come way back down, which has been the pattern since March, last March, since we bounced off the January, February lows. Looking at today, this this 218 is going to be the area we want to watch. Can the market make a strong move above it and consolidate up here? Then we would watch to see if it made a new all-time high. I have 216.80 to 217 as a support band right here. And of course, yesterday's low, 217.5. So IWM is already being walked up above 130 in the pre-market, topped out the other day at 130.25 all-time high. The bid's creeping higher in this the last couple of days. We had 128.50 2 days ago. In the morning, it flushed below it, got back above, and held above before making the run towards 130. Yesterday held a little bit higher, 129. In the afternoon, held the 129.30. So we'll see if we can start to hold above 130.25 today. Certainly a drop out on the open to around 129.5. I'd be interested in buying. Okay, so a bunch of fresh news. Large cap stocks reported today, or after the close. First is Best Buy, who continues to do very well. People thought a few years ago they'd go out of business because of Amazon. A lot of people like to buy their electronics in person. They don't like to do it over the phone or over the internet. So they continue to stay around. Also, a lot of their competition went out of business, so that helped. It's had this multi-year downtrend. Kind of broke out of it in 2013, came all the way up here, topped out in the mid-40s. Tested the 25 area a bunch of times in the last couple of years. And now we're right back up here, this upper band. So last time we tested it was 3 years ago. We're 43.5 bid right now, so right there. It'll be interesting to see if this 3-year consolidation, if it can break to the upside and actually go to $48, $50.
Anybody has any locates if they don't want to?
So I put 42.80. That was just kind of based on pre-market where we caught a little bit of a bid after 8 o'clock. A flush on the open down to closer to the 42 area, I think presents a pretty good risk reward, very good risk reward on the long side. Otherwise, you're going to need consolidation above 43 and play it for move through the after pre-market
100 max
high. Normally does 5 million shares. It's coming into earnings. It was already bought. Had some very strong days. 4 of the last 5 days bought pretty aggressively. Look at let's look at the consolidation over the last. So it gapped up here on the last earnings above 38. I thought the numbers were good there. Next day topped out at 40. They tried to fill the gap, didn't quite do it. It's a lot of accumulation since the last earnings report in the high 30s, in the 38 to 40 area. So I think that people are incentivized for this to really follow through. So that's my first inclination. FSLR is got some major issues. It was a $70 stock not that long ago. It's another one that, you know, and the story behind this one is in the late 2000, 2008, 2007, people didn't really know how profitable these solar companies would be, so they ran them up to too high levels, then they got crushed. This one bottomed all the way down below $10, and then had a nice multi-year uptrend. Actually, when it broke the weekly downtrend, I think it was here, it trended up really nicely, but you can see 3 times failed in the mid-70s and was on its way back down. And so now it's really completely broken. It's gapping below 30 right now. Then there is no real support till the mid-20s. 26 around. You can see when the numbers initially came out, it was 28, and then it bounced above 30. I would think there's a pretty good chance that it could retest the after hours low. If it takes that out, as I said, there's really no support. After this initial pop to $30 in the after hours yesterday, it was sold away on volume, back down through 29. So I think it's a short right here. I mean, anything's possible right in the open. They could pop it back up to where it popped in the after hours. But I like the idea of being shorted in the mid 29s. And then confirmation. Holding below 29. You have 20 to 50 as potential support in the after hours. Some volume did come in here. The 20 to 50 level. So I'll watch that level right on the open too. I'd really like to focus on the short side on this one. And a lot of times these stock are down 60% from the high. Those are really good bounce candidates. But in this case, when you just look at what's going on with the numbers and I mean, basically what we have is this whole energy complex, whether it's coal, whether it's natural gas, solar. The production of energy keeps on getting cheaper, but the business of actually building the equipment to make the energy just seems incredibly low margin and incredibly competitive and just tough to make money. They have to do all sorts of adjustments to the you know, they call them one-time charges, but they're always taking one-time charges. But under normal accounting principles, the numbers are really, really bad until they back out all sorts of stuff. So normally trades 4 million shares. Could trade in the 10 to 20 million share range today. But my first look on this one will be to the short side. Cisco is another one that had bad guidance. I had that in the after hours on the initial dip to 30. It quickly popped back up. It was actually trade worked nicely. You can see it came down here to 30, and it did pop up. I was able to get some sales all the way up here, and then had trouble getting over 30.50. And now it's just, this 30 is going to be the level really. It's not breaking down below it, but it's not bouncing. So this one's very liquid, so you can trade this with as much size as you want. It's very low risk. Just from a longer term, bigger picture perspective, this is another one where I could see it over time working its way to lower prices. But it is a large gap for Cisco, and could see it easily if they start holding the 30 bid here, popping to 30 cents, where you can see in the after hours it failed a bunch of times. It gets below 29.90 though, you want to be sure. So it's traded 700,000 shares already, normally trades 21 million. It's going to be extremely liquid. See, someone's trying to buy it right now, trying to get it to bounce. It's still not bouncing. Just look for whether it's holding above or below 30 right on the open. And just be careful of these above and below programs right here. You want to see it, if it does get above, you want to see it get above 10 cents and start to hold at higher prices. And you look for that move to here. And vice and the opposite at 90. You want to see it get to 90, hold below. Intab. So their EPS numbers are really good. They're just that their revenue's not really impressive. Now that's good in terms of margin, but if we go to the daily, we're a little bit at 38 in the after hours. The stock had bottomed down here at $22 at the beginning of the year, and then it held higher at 23. This was last quarter, it gapped up to 31, ran all the way to 36. So they're executing really well. It's just that they're not really growing the top line. They're growing the bottom line through good efficiencies, which is great, but we want to be growing top and bottom line for a stock to kind of really take off, like NVIDIA. So when I look at this, 38, 39, this area here, in the beginning of 2015, this is a long ways away from the bottom here. I'm just becoming a more efficient company and not really growing the top line. So that's my bigger picture thought. If we zoom in on the pre-market and after hours action, I think we have pretty good information here. So initial move was up. It stopped at 38. When I initially shorted it there, it did drop about 70 cents. Then came back up to 38.40. But it's been holding above 38. So what I'd look for is if this one's actually going to fail and be sold on this gap up, but it's going to look like it's going to fail in this area up here, and it's going to get below $38. If it doesn't get below $38, if it comes right back down to where it was in the after hours here and holds, then perhaps it'll hold the gap again for the second quarter in a row. And then finally, Walmart. Numbers didn't look that bad to me. Guidance for next quarter, the way that they give a wide range. When a company gives a wide range of guidance, you take the midpoint as kind of their estimate, and if you take the midpoint of their wide guidance, it's below where current estimates are. I think that's what's hitting the stock. So this is where it probably got down the day after the election and got back above 69 pretty quickly. So that's really what you're looking at, and I guess that's what's holding in the pre-market. So 69, did I put that on there? 69 is probably going to act as the inflection. So earlier it was down there again, volume's coming in. So 69 looks pretty good. If it holds here, see it bouncing back up to the 70. 21% growth year over year on online sales. I thought that was notable. You know, Facebook and Apple, we finally started to take a look at the last few days because they've gotten oversold. Facebook had a really strong bounce in the first hour, and then after pulling back, it held this 116.5 and made a new high, but after that, it was sold the rest of the day. So I shorted a little bit in pre-market into 117. I want to see if it tests this 116 from yesterday afternoon. It starts to consolidate above 117. Look at yesterday's high, but very different afternoon than we saw from Apple, which you get Apple, I think we highlighted a couple of days ago, as oversold and had a good bounce. And this one actually never sold off, closed at the high. So if they buy this one again today, which it looks like based on this yesterday's action, you're looking at 110.80 to 111.10-ish. Has some upside there. So right on the open, if this one pulls in a little bit, for the mid 109s, low 109s, you're going to have a pretty good risk reward to play it for move right back up to where it broke down from last week. Target, I gave up on this one too early. I did short it on the open. I believe on the 78, and I think the third spike is kind of what got me to the side. Maybe it wasn't such a good short. I think I covered in here somewhere. But after the open, after 10 o'clock, it did start to hold below 77.5, where it had acted as support for about 20 minutes. And then kind of started a downtrend for the rest of the day. So o'clock, 10:15 a.m., always check back in with things. A lot of times you'll get wicks like this or the opposite, wicks, lows, things will put in bottoms or tops in that first 30 to 45 minutes. And you can capture a trend that develops a little bit later in the morning. So good reminder on that. Looking at prices, after this downtrend started, it did pop back up and failed here at 77. So that's a price level that would interest me if it popped to in the morning. And then I think 76, I think I had it as support in the game plan yesterday, potentially. And 75, it did close right at that area. So if it's holding below 76 on the open, we want to take a look and see if we can take out yesterday's low. Pretty steady selling all day after the first 30 minutes. And low, same thing, kind of, it topped a little bit later in the morning, I mean, probably about the same time as target. Went straight up from 66 to 68 to 68.80. I believe I covered in this quick dollar drop out here. Eventually started to hold below 67.5, tested it one time. It was a good trend, but that trend got broken in the mid-afternoon when it got accumulated here at 66.60. So that's definitely something to watch for today in that area. So it's been 39.16, so 15 minutes to the open. What to say is, you're seeing guys trade these shippers a lot. Some of them we've seen go up 500, 1,000, 2,000%. I haven't spent time talking about them because I found over the years many people just are not mentally prepared or have the skills to trade these kind of vicious, crazy moves. Certainly, as the viciousness has happened for a few days already, they should start to settle down and start downtrends. If you see the price action settling down and they're behaving well, that's the time to kind of get involved and nibble for less experienced traders. And so those are my thoughts on that. But just because something moves a lot doesn't necessarily mean it's something good for you to trade. It's always about managing our risk and being able to control our risk. As always, be patient and good luck.
Hope you enjoyed that video. You can actually watch that video if you're subscribed to our Trader 90 before the market even opens. What stocks are in play? What levels in those stocks are important? And how we might go about attacking that stock. That's Steve Spencer, 20-year veteran trader, laying it out there every morning before the market even opens. A really, really powerful tool to start your session off on the right foot. So right now we're offering a trial that you can take advantage of to access this meeting and other meetings throughout the day. We have a meeting at 11 a.m. Eastern where you can sit down with Mike Bellafiore and listen to him talk about what's going on during the morning session, what stocks were in play, what the best trade opportunities were, as well as maybe some things that we're looking at heading into the afternoon session. So I really encourage you to take advantage of that trial.